And it's October 12th, 2023, right here in Lagos, Nigeria. Good morning, good evening, wherever in the world you're watching from. It's Business Morning live from Channels HQ right here in Lagos. We have a packed show for you this morning. But first off, let's take a look at what's happening in the news now. We see the federal government has approved the elevation of the National Lottery Regulatory Commission, NLRC's annual gaming conference to international standards in order to attract more foreign investment and inflow of resources to the country. This is contained in a press release issued by the Director General of the National Lottery Regulatory Commission, Larry Gbajabiamila, in preparation for the 2023 edition of the conference scheduled for October 31st and November 1st at the Eco Hotels and Suites in Victoria Island, Lagos. According to the Director General, the approval also became necessary to attract more players and foreign investors, thereby expanding the nation's business frontiers and creating more wealth for Nigerians. This year's conference is expected to have key players in the gaming industry in Africa and across the globe in attendance. Let's get a check on the grains market. Now we see Chicago soybean and wheat futures fell today, and corn futures firmed as the markets turned their attention to widely followed U.S. government crop forecast. Corn prices climbed about 2.5 cents to settle at $4.88 a barrel, a hair above the 50-day moving average. The most active soybean contract on the Chicago Board of Trade, SX3, dropped 19 cents, about 1.5%, to settle at $12.52 for half a bushel. We'll drill down what's driving sentiment later on in the show. To the global oil market now, we see oil prices fell over 2% today as fears of disruption to supplies due to conflict in the Middle East receded a day after top OPEC producer Saudi Arabia pledged to help stabilize the market. Brent crude fell $1.83 to settle at $85.82 a barrel. US WTI crude fell $2.48, about 2.9%, to settle at $83.49 a barrel. And the International Monetary Fund has ruled out debt cancellation for emerging countries. Managing Director of the IMF, Kristalina Georgieva, made this announcement at the meeting of Bretton Woods institutions in Morocco. Her comments indicate that poorer nations may not get relief on their debt burden as the fund is yet to recover from its exposure to COVID-19 virus. Meanwhile, the IMF's Deputy Director in the Fiscal Affairs Department says tax evasion and concessions are rampant among African countries. He said preventing tax evasion could generate up to 2 to 4% GDP, depending on the quality of enforcement. Meanwhile, ministers of finance and central bank governors of G24 and intergovernmental group focused on international monetary affairs and development finance have met as part of the sidelines of 2023 IMF World Bank annual meetings holding in Marrakesh, Morocco. The group, which is under the chairmanship of Mr. Dama Coulibaly, is discussing how best to facilitate coordination among developing countries on critical international monetary and development finance issues. Take a listen.
The G24 meeting brings together financial leaders from across developing nations to address pressing challenges facing their countries. Key themes of this meeting revolve around development and climate financing, debt relief, reforms of international taxation and trade, reforms of Bretton Woods institution, and reform of IMF surcharge policies, among others. Central bank governors and finance ministers engage in robust discussions on a variety of steps to increase the financing available to developing countries, but note that some of the poorest and most vulnerable countries are excluded from the benefit of debt credit. Nigeria's Minister of Finance, Mr. Wale Edun, shares his thoughts on the outcome.
The government of President Bola Ahmed Tinubu has emphasized also came to the fore here, and that is domestic resource mobilization. The fact that we have to depend on our own resources, our own savings to a larger extent, must be efficient in collecting taxes and fees and payments that are due. We must be more efficient and cost-effective with our expenditure, and we must create a bigger base of financing.
Participants believe that responsible lending and transparent debt management practices are important.
One of the issues faced by everybody, all nations, is high inflation, right? So I guess what the central banks of each individual country can do is to weigh the the trade-off between tightening, further tightening, and of course slowing growth. Okay? I think the general trend now is to slow down the tightening to allow the countries to recover.
The challenge we have on the African continent, so to speak, has been the rise in debt levels, in particular in late years, where these rising debt levels have been caused by a number of factors. The first factor, very important, was the depreciation of currencies across a number of these countries, as interest rates were also rising. We've increased inflation across these countries and rising interest rates that necessarily led to increased debt levels across the continent.
The G24 meeting marks a significant step towards addressing financial challenges faced by developing countries. The commitment of central bank governors and finance ministers to debt relief, sustainability, climate finance, and innovation reflect a collective effort to promote economic stability and development.
Meanwhile, the World Bank President A.J. Banga says the sure path to growth for the African continent is intra-African trade. He made the comment at the ongoing IMF World Bank annual meeting at Marrakesh, Morocco. Joining us now for analysis is Adebayo Adeleke, founder, Supply Chain Africa, joining me via Zoom. Great to have you on the show. Good morning.
Good morning, Larry. Can you hear me?
I can hear you, and thank you for staying up. I know it's really early right there in the U.S. Thank you for staying up and joining us this morning. But you see, the World Bank president now has emphasized the importance of, intra-African trade, for the African continent's growth. Could you share your perspective on where Africa is right now? Is there any notable improvement so far with intra-Africa trade? We've been talking about this for the longest time.
Absolutely. Thanks, Larry, for having me. Yes, we're at the onset of the African Intercontinental Trade Agreement. More or less is a facilitating agreement for the most part. There's a lot of things at play for the past few years. Just setting up the trade agreement is quite imperative, and getting all the countries on board. But that's one battle. And there's another battle is aligning all the necessary policies within these countries to be able to make sense of intra-African trade. It's an Herculean task, to say the least, because we have different democratic values, if any at all, in some countries. So we have different economic leanings as well. So all these things we have to make sense of all these things are quite aligned to be able to facilitate intra-African trade. And I know the agency ahead of, kind of managing this, have had a lot of work at hand because they have the digital aspect, the digital trade aspect of it. You have policy aspect of it, and then you have these different governments, different sector of the continent. You have the ECOWAS, you have the Central Africa, you have the Southern African countries as well, the Northern African countries, and every one of them has regional issues that they're actually contending with. Amongst everything else, then we have to kind of facilitate all this trade. So I can say categorically at the onset of it, it's going to take years to really see the full-fledged of what intra-African trade can actually do. But if we kind of look into the future, we have a snapshot in what the future is going to look like. The future is bright if every country can have this mass effort towards this initiative of trading within African countries, trading among itself.
Share your thoughts now on the key hurdles that need to be overcome to boost, intra-African trade, and what strategies or recommendations you have for, addressing these challenges.
Well, there's a lot. Well, let's start with security first. Even security is the center point of everything. It's a bedrock of trade. It's a bedrock of economy. As we've seen the last few years, a lot of African countries, a lot of them have been kicked out. The majority of them that have been part of it have been kicked out of ECOWAS. We have Guinea, we have Mali, Burkina Faso. Now we have Niger, and then Chad on the other hand as well. Then we've seen one in Gabon. All these things have, the coup d'etat that is going on over there has not really facilitated trade. And as we continue to see this authoritarian regime or military junta, so to say, across Africa, instability in African security is on the kind of underpins the actualization of inter-African trade. So for this to really happen, and I know the reason, I mean, organically speaking, from information we've gathered so far over the years, it's because a lot of these military juntas came into being because they felt that democracy hasn't given them the necessary thing, the necessary so-called output of democracy. And I mean, I get it. But at the same time, military junta and authoritarian regimes are not the answer to it. So we have to solve these things. And one of my recommendations is to kind of, but these recommendations can only take place when in a democratic environment, not in the military junta, because it encourages all to participate in the democratic process of this country so as to facilitate socioeconomic prosperity of these countries. Because without socioeconomic prosperity, you can't really, there will be no productivity, nobody will be able to do anything that will facilitate trade. So that's one part. And then on the second part, African trade route has been always is a colonialist in nature. Most of the African trade route, and I've said this thing on your show before, and I've said in most of my writings, African trade has always historically been to drive resources out of the continent. So if you look and see, most of the trade that we do right now is for countries that are outside the continent of Africa. So for us to actually reroute these things for African countries to trade among themselves, we have to change the trade routes, either by the road corridors or the land corridors, rather, the air, the rail. And some countries actually use rail, and also the waterways. Most of African countries, as of today, do not have trade routes for at least for different corridors. And the land corridor is probably the easiest part. And I know a lot of countries have done a lot of road networks, but these road networks are just still pushing the resources out of the continent, not to move resources from one country to the other. So that has to be realigned. And if that is realigned, of course, the custom issues, the tariff issues, and everything will follow suit. So those are the two quick, easy ways that we can actually realign and get this African Continental Free Trade Agreement. But I know a lot of discussions, a lot of work has been done. A lot of policy change has been done, but there's one thing about policy change, there's one thing action in the policy change, and that can be very brutal sometimes because a lot of personal and national interest. And we also have to put into consideration the sovereignty issues as well. Each country has something, and that's one thing Africans haven't done in the past few years. We are so territorial in our nature that it's going to take a while, consumer behavior change to be able to drive those kind of, because consumer behavior drives demand, and demand drives supply. So in a way, we have to kind of change those consumer behavior, and that can be done through the sovereignty realm of each country. So each country has a lot of work to do in evangelizing and advocating for African trade to happen.
Right, and definitely, I'm sure definitely countries are working towards this. I did see in a supermarket recently, I saw, they had some blueberries there for sale, and I saw that the blueberries were from, Mozambique, and I saw that and I actually smiled. But are there any notable initiatives or policies that, African governments are implementing to encourage and, enhance inter-African trade, and how can private sector players, like yourself, collaborate, with these efforts?
I've always pushed this forward that, for every trade and in every economy, the supply chain drives it. It's like a train track. It's like a track at which trade runs on supply chain. So for for us to be able to actualize free trade agreements across Africa, or facilitating agreement, because it's not really a free trade, it's you're facilitating trade among African countries, is that we need to kind of re-educate and reorient the African supply chain body as a whole, because those are the drivers of trade and economic prosperity. From supply chain Africa, that's one of our key tasks, is to make sure that we re-educate African supply chain providers, also every school procurement providers in these so-called African intra-African trade. And most importantly is that each country has to put it upon themselves of how to drive this. Each country has its own economic agenda, and that thing, from my perspective, I don't think those things have been sinking. Ghana, the way Ghana is doing business, and Benin Republic is doing business. And let's look at Benin Republic and Nigeria, very close to neighbors. If anything happens in Nigeria shut its borders, which has happened in the past few years, it really affects Benin Republic. And Nigeria has its own internal issues. They have to boost its own trade as we are continuing to go devaluation of the devaluation of Naira. We need to produce more and be able to ship more out to different African countries. But the other African countries are not receiving it, or they have a different perspective of how they receive the Nigerian produce. It becomes a very challenging issue. So we have to kind of sink this in, and Africa and then supply chain professionals at the helm of it to be able to make this happen. So what I've seen so far, and what I believe African, different economic bodies in African countries have to come together, because the African Union is doing it with the Secretariat in Ghana, but African countries independently have to look at, these issues independently. Because what I've seen, for example, within the new government, with President Tinubu government in Nigeria, has been facilitating a lot of work with Nigeria and other African countries, with the other countries outside of Africa. But let's look at how is the present administration in Nigeria can facilitate trade and economic prosperity among its neighbors. And I know there's a lot of discussion in ECOWAS, but we've yet to see some traction going. So if Africa can actually, kind of sink the economic prosperity among its neighbors, I think we have a lot of things. And some of the devaluation of Naira that we experience right now will be slowed a bit because but we're so focused on this international market that we neglect the neighbors around us. So those are the areas we need to focus more, and we need to actually channel our policies in, making sure that the people or the countries around us are actually benefiting from our trade facilities, rather than focusing much more on international markets.
And talking about the AfCFTA, definitely a significant development right now. How do you view its progress and its impact on the continent's trade dynamics? I know a couple of countries are already trading, under this agreement. I did, hear about Kenya sometime earlier this year. They've already started, taking advantage. Tell us more about, some success stories right now.
Yes, they've started testing on this new agreement. For example, like you mentioned, Kenya. Most people don't know that Kenya, beside China and Sri Lanka, has the largest tea export. So, but again, if you tell Nigerians that you want to drink Kenyan tea, they'll look at you like crazy, because most Nigerians don't even know that Kenya actually is a bedrock of tea exportation. There's a lot of, they've tested those things, but, and it has worked, and don't get me wrong, it has really worked. But the path at which it worked is what really concerns me, because from what I heard, I might be wrong on this, but when I heard, most of this trade was done via air, and that is quite problematic, because air transportation to facilitate large national trade, is quite unsustainable for the most part. So we have to figure out a way to get this on the ground, open those supply and logistical pipelines in such a way that we can have massive trade among different countries. So far, the litmus test has been great, but in a controlled environment, a controlled system, whereby Kenya is doing a trade with another country, with Ghana or some other country. So it's very controlled. But let's open it up a bit. Let's make it more interesting in such a way and in such a manner that we put all the necessary factors and variables in there and see how these the trade agreement actually pan out, and be able to twist and tweak as necessary. From my point of view, I think it's a great experiment, because everything in this world is pretty much an experiment. And I think if we continue to adjust the variables, I think we'll get there. And I'm an advocate of it. I believe it's the way for Africa to prosper. And actually, we used to do this hundreds of years ago. African, what we now call the geographical, geopolitical space that we call Africa. Our first encounter with the outside world is through trade. So we've traded over the course of time, but due to colonization and whatnot, we kind of deviated from that. And I think we need to go back to what actually made us prosperous over centuries ago, which is trading among ourselves, the sub-Sahara trade. I mean, you've read a lot of those things in the books, but actually they actually happened, and that's what brought prosperity to Africa. So we need to get back to the drawing board, to the basics, and I think it's doable. So far, the onset of it is great, but we need to expand it. We need to kind of veer away from this controlled environment and make it quite more interesting, and get more variables in it, and see how it's gonna pan out. So I think it's a move in the right direction. I believe we can continue to champion this, but each country has to have an effort towards making it happen. It cannot happen from African Union perspective. Each country has to make it a point of duty that Africa Continental Free Trade Agreement must work. If not, we're kidding ourselves, and it's going to be a long time before we really have the full actualization of what the Intercontinental Free Trade Agreement is supposed to look like.
Yeah, we definitely need to make it work at this time. But talk to me now about currency. You know, before I let you go, we know most African currencies are under pressure, you know, right now.
Yes.
See, the Naira also is under a lot of pressure. Is there a way we can, you know, trade with our own currencies, you know, in Africa to, you know, strengthen our currencies? I know everyone's talking about, you know, de-dollarization and all of that. We know King Dollar is that, you know, preferred currency for trade. But how can we, you know, use, you know, intra-African trade to actually strengthen our currencies here?
Absolutely, and I think some countries they've tried it before, but there's one thing putting one thing out, there's another thing going through it. And that has been the storyline. We African countries have tried this over the course of time. Actually, before we even use currency, before what we now call Naira, dollar came to be, we've always traded values. And that's always been the what value, you know, the value for value. And I think, I believe that can strengthen, you know, in a massive way. But one thing underpins anything, any trade, is what value are you bringing? And in the African country perspective is the fact that we're not producing enough. We have to produce. We have to produce enough to trade with, and that's what. And for that to happen, there's a lot of infrastructure built within the countries that needs to happen to be able to produce more. So if you don't produce, then what are you going to be able to trade with? And that's the bottom line of it all. So, and you can't have one without having the other. It's like, you know, chicken or egg, which one comes first? You know, so we have to build up, you know, infrastructure within our countries to be able to produce more. And I think that will not in every country, that whatever resources within your means to be able to build the best of their ability. If your textile is what you do best, invest in it and trade with it. And I think if we can actually do that across Africa, I think we're up to something great. But everyone is still just posing all around the place and, you know, kind of in a way that is quite unstable for us. So we have to make sure that we continue to kind of facilitate those infrastructures to be able to move those and produce more. Now, we in Nigeria, we have infrastructure to produce a lot of product, and we haven't capitalized on it. Is it our oil? Is it agricultural product? Agricultural sector is supposed to be the biggest sector that's supposed to benefit from this intra-African trade, but yet we've not been able to, you know, facilitate it because our agri sector is suffering a lot. Is it through grazing? Is it through, you know, storage issues? I mean, all these things can help us actually. But if we can buckle down a bit and actually, you know, settle down those infrastructures and build those infrastructures to make a massive produce, that we were up to something. Yes, we can trade with it, and it will definitely help our currency out. But we have to produce first.
All right. I guess bottom line is produce more. Produce so that we can trade more. Thank you so much, Deboyo Adeleke, founder, Supply Chain Africa. It was great having you today. Thank you so much.
It's good to see you again, Larry.
Good to see you too. Thank you. All right, after the break, commodities market update is next. It's inflation season. We'll take a look at what to expect going forward. That's in a moment. Just stay with us. And it's inflation season right now. Everyone waiting for the September report from major economies. And right here, we're also expecting, you know, the inflation figure for September right here in Lagos, in Nigeria. And definitely we have to unpack that. We have Dumebi Oluwole, Senior Analyst, Financial Derivatives Company, joining me right here in the studio. Dumebi, good morning.
Good morning.
Yeah. Yeah. So some countries are already seeing, you know, some improvement, you know, when it comes to inflation numbers. Last for August, we were 25.8, big number. What are you expecting for September?
Yeah, so actually, August, I think it was 20, yeah. Regardless of whatever the number is, we know that inflation numbers are gonna, you know, increase a lot more. And this is primarily because of the depreciation in the Naira and how that is now having a very quick pass-through effect to inflationary pressures in the country. And this is primarily happening with food prices, and then you now have that feeding into importation costs for businesses, and then that's also feeding into their operating expenses, and then they have to, it's a whole loop that has, continued to happen. And right now we've seen from the reform period, that's when Nigeria unified its exchange rate, up until today, the Naira has lost over 20%. That's between May and today. And year to date, the Naira has actually depreciated by almost 40%.
That's a huge number.
That's a very huge...
40%.
Yes, by almost 40%. That's a very huge number. The gap between the official rate and the parallel rate has widened after narrowing to about 2% when the reforms actually started. It has widened again to about 26%. And what this tells you is that the true value of the Naira is beginning to look more like the parallel market, rate. And while that unfortunately seems to be very true, what this also means is that market participants would continue to bet against the Naira. They will continue to hold their dollars, and then at the same time, go long on the dollars and go short on the Naira, simply because of two things that are happening. Number one, FX supply issues are still lingering, and with the FX supply issues lingering, people, market participants do not expect that there will be any significant boost in supply in the near term, and then that now spirals into speculative buying, and then we see that happen on the demand side though for the Naira. And then, like I mentioned before, with supply side issues still lingering, and then the market participants continue to price all of these risks into the Naira. And then to worsen it, the US dollar has been gaining marginally. Or between from the beginning of the year up until today, the US dollar has strengthened by over 10%. And what this means is that market participants as well will keep favoring more stable, safe haven currencies like the US dollar, as opposed to holding Naira, or even making Naira investments in the country. So these are the issues that the Naira is currently facing, and unfortunately, they will still it will still be very potent in the near term. And I guess one last issue is the fact that, number one, the fact that the CBN as well, I will say the credibility of the CBN in actually sticking to some of its policies has actually come into question when it comes to the forex market. And we see that market participants actually price this as a risk. So there is something now called as the CBN risk, in the forex market. And unfortunately, we see market participants actually price this in. And what this comes in the form of is, number one, actually supplying FX continuously and by the same magnitude in the forex market. Now, because supply is not consistent, and at the same time it doesn't come at the same magnitude, there is uncertainty with FX supply, and that is priced into the market.
I remember one time, even the BDC operators were complaining that they didn't have enough supply.
Yes.
But I saw this interesting tweet yesterday. The person talked about going to the black market to buy some dollars, and they were offering at the parallel market rate.
Yes.
And he said that he insisted that he wanted that official rate.
Yes.
And some said it was sarcasm and all of that. But just imagine we all had that mentality.
Yes.
Would that help at all?
I mean, I don't think it will, because it's really not their fault. The dollars are scarce to give. So, and it's just demand-supply dynamics. If supply is short, the price will go high. And if you really think about it, from the economic perspective, exchange rate really is the price of your currency. So if your currency is scarce in the market, what will happen is the price will go up. That's exactly what's happening with the Naira. So once dollar is short, people will decide to hold. And it's just how it's like buying and selling, basically. Right. If people expect that, this is going to continue to happen with the Naira, they will hold their dollar positions in expectation that the Naira would fall a lot more and they could gain. You make profits off that.
So maybe I'm looking for patriots here that will say, you know what, let's defend the Naira any way we can.
I mean, but regardless of that, you know, there's a lot more that happens from just from just me and you meeting up with a commercial bank or a BDC operator to get some dollars. There is still that overarching thing that has to come with monetary policy as well. When we go back to the fundamentals of economics, you realize that monetary policy comes in play when you look at price stability. And price stability is not only inflation. It also comes into play with the exchange rate as well, simply because the exchange rate does a lot more than, you know, does a lot more for an economy than just what your currency is. It is a very huge tool for investors. Exchange rate does tell you the attractiveness of your economy to foreign investors. So if your currency continues to fall, continues to depreciate in value, foreign investors would definitely price that in before even lending you money. So if you venture into the international debt market, it is one of the things that will be priced against you when you venture, you know, when you try to get loans and all of that. Credit rating downgrades as well. It is one of the things that feeds into that. And then when you look at it from a macro perspective, what your exchange rate devaluing continuously does, it increases inflation. So there is that dynamics between exchange rates and how that feeds into inflationary pressures in your economy. Number two, it makes your foreign debt more expensive. So your dollar-denominated debt, so the debt that we're looking at right now for Nigeria, in dollar terms, is becoming more expensive. And what that does is there is now another risk of repayment being priced into the economy. That's whenever investors or business owners are looking to set up shop or even bringing their funds into the Nigerian economy. There's also what it does for government revenue. So if you're not earning as much in dollar terms, in Naira terms, it means that your money is also small.
Right.
So the exchange rate has this domino effect. And what I was saying again about the CBN as well, you know, right now the MPC meeting was postponed. We don't get.
Right. Yeah, I was going to bring that up because we're expecting, we're definitely going to have a meeting.
Definitely, that has to happen.
It's going to be the first one under a new
CBN government.
Leadership.
Yes.
But what should they be? There's a lot of pressure right now. Currency devaluation,
the FX backlogs, forex forwards.
It's so much.
So there's a lot of things.
Where do they start from?
And like I said before, that's why I called it the CBN risk, right? Simply because there's there are a lot of balls, you know, juggling at the same time. And the CBN governor does have his work cut out for him. And the question now is what to prioritize. But because inflation is spiraling, the Naira is also devaluing very quickly. And a lot of this uncertainty and silence is what is also being priced into the devaluation of the Naira or the fast depreciation of the Naira. The Naira touched 1,030 Naira yesterday.
So sad.
Laddie.
That's so sad.
How it moved was pretty significant. It moved from 1,005 to 1,010 to 1,020 before closing at 1,030. And what does that tell you? There's a lot of market sentiments that are not in favor of Nigeria right now. And we need a quick fix. We need a quick fix. And it's more than press releases and press statements that will instill that investor confidence and encourage people to not keep shorting the Naira. We've done the reforms, and with reforms you have to continue with them. If not, what we're seeing is the reform momentum is literally going down, and we need to bring that back up. We've started well, and we definitely need to continue so that this risk do not, you know, this reform momentum doesn't end up coming back, you know, to cause the chickens to come home to roost. That's exactly what this case is. And a very good example, I said this the last time with Ini, is the Asian 1997 crisis that happened, South Asian. This is exactly what started it, and we do not want a full-blown exchange rate crisis on our hands, because it will now take a lot more time to solve the damage, right? Because we've started the reforms, we need to stick to it. So things like the restrictions on FX importation, Nigeria is not yet self-sufficient, and the more supply, the more we're not able to fix our agricultural productivity, the more we need this exportation, the more we need this importation, we need these goods to come in so that prices are able to stabilize to an extent. If we were producing enough, then the conversation about import substitution and import substitution model for fiscal policy will be a lot more credible and will make a lot more sense. But right now, we don't have that. We're not producing enough. Our farmers are struggling, you know, so there's that issue coming in. And manufacturers are also struggling with imports as well. We have port issues to solve. We have a lot of things to pricing, and it's just not doing the job for the businesses that should be creating the jobs that we need and eventually boosting the output that we need. Because really, when you look at the role of government, the role of public officials, of even fiscal policy in general, is to create that positive environment, that thriving economic environment for businesses to come in and do their job. That's why we talk about private sector-led economic growth. And to be very honest, the Tinubu administration has been very big on that, but we just need them to go a lot more. If we've started, let's go all the way.
Right.
No, there's no time for us
because it just seems like at this point there's no time to waste time. You need to go ahead
exactly.
Because we're seeing the IMF there revising our growth forecast, for 2023, but they are seeing some improvement for 2024. How do you see that?
I mean, that's pretty much what everyone expects. When you take on reforms, the expectation is that your economy will definitely be hard hit, consumer demand will fall, and Nigeria is highly consumption-based. When you look at the formula for national income accounting, you know that output is a function of consumption, investment, government spending, and then net exports.
Yes.
And in Nigeria's national income accounting, consumption alone consumption makes up 70% of that before you take into account investment and government expenditure and then net exports. So if consumer demand continues to fall simply because prices are spiraling, and prices are spiraling because manufacturers are experiencing this, so there's a lot feeding into that consumption function, and the expectation is that consumer demand will continue to dwindle just simply because of the hits that consumers are feeling. We're seeing the income bracket shrink a lot more, and there's almost no middle income class anymore. So right now middle income class
is practically wiped out.
Yeah, so it's either you're rich or you're poor right now, and it's especially when you convert what you earn in dollar terms, that's when the real reality of your income, comes into play. Or when you take that money you earn and you go to the market to really buy things.
Maybe I want to be in the rich class so bad, but oh my goodness. Hopefully. Yeah. Thank you so much, Dumebi Oluwole, Senior Analyst, Financial Derivatives Company. Thank you.
Thank you.
All right, we'll take a moment now. All right, we have some data coming out in the UK, and we have Teniola Oyetayo to give us, to break it down for us. Great to have you, Tenny. Good morning. So we see the UK economy grew by 0.2% in August. Tell us about the drivers here.
Yes, Ladi. After that worrying slump in activity we saw in July, August saw a very moderate growth of 0.2%. And like you mentioned, the services output was the main contributor to growth, adding 0.4% to offset a fall in production output of 0.7% and a decline in construction output by 0.5%. The growth in the services sector was largely because August was mostly quiet compared to previous months where there's been significant factors impacting on the economy. The past 3 months have been very bumpy for the UK. We had the extra bank holiday which hit output in May. June bounced back stronger than expected. Then July saw a bigger than expected fall due to poor weather. The data released today also showed that GDP shrank by 0.6% in July, more than the original reading of a 0.5% fall. That's the biggest month-on-month contraction since June 2022, when there was a one-off bank holiday for the late Queen's Platinum Jubilee. So it's really all not good news. But analysts do believe that the moderate growth we saw shouldn't stand in the way of the Bank of England keeping interest rates held at 5.25% in future meetings. But all eyes will be on those figures, the figures for this month when we get them next month, Laddie.
And fears of pipeline sabotage are revived again across Europe. See, an undersea cable from Norway is set to provide energy lifeline for the UK this winter. Tell us more about this.
This is all in preparation for the winter, like you mentioned, in instances when wind farms can't generate enough power. With a small risk of shortages in January, like we all know, following Russia's invasion of Ukraine, Norway now supplies 30% of the natural gas consumed in the UK. Total exports from Norway to the UK climbed to a high of £41 billion last year. So from early next year, also a second Nordic interconnector will join the North Sea link from Norway, a milestone that authorities are saying will help safeguard UK energy security. There has been revived concerns about the safety of infrastructure in Europe. Earlier this week, there was a suspected act of sabotage on an undersea gas pipeline in the Gulf of Finland. So, you know, this is in preparation for any instance ahead of the winter, laddie.
Yeah, definitely good to prepare early enough. Thank you so much, Teniola Oyetayo, Channel TV correspondent in London. Thank you.
Thanks a lot, laddie.
All right, let's head on to the markets now. Let's take a look at what's happening with the fixed income markets right here in Nigeria. And definitely, we see the FMDQ information reaching us from there. We see the deals for the 11th of January 2024 open market operations. They're 4.60%. They're one deal and just total of 3 deals there valued at 5 billion naira. Let's move on now to the Nigerian Treasury bills market. See, 25th of April 2024. That was 4 deals there. Got a lot of hits there, worth about 8 billion naira. In total, we had 6 deals, total value of 11 billion naira. Let's move over to the FGN bonds there. We see for the 26th of April 2053 there, got 5 deals worth about 3 billion. Total number of deals there, 7, and total value 3.8 billion. Well, let's take the conversation further now. Let's talk to Senator Audu. Senator Audu, team lead assets and liquidity at Access Bank. Great to have you on the show, Senator.
Thanks for having me, laddie.
Yeah, so there was a T-bills auction yesterday. Break it down for us. How was investor sentiment?
Yeah, as you rightly said, there was the NTB auction yesterday. The DMO offered 36.56 billion across the standard maturities. The standard maturities being the 91-day, the 182-day, and the 364-day maturity. Given this relatively small amount on offer, we saw market subscription at relatively low levels at just over 321 billion, about 8 times the amount on offer. We, however, saw the DMO stick to his guns and sell exactly what was offered, about 36.56 billion. We, however, saw rates across all three bills on offers offer drop. Particularly, to give you some color, the 364-day dropped from 11.37% to 9.25% yesterday. We saw the 91-day and 182-day close at 3.67 and 5.11%, respectively. Immediately following that auction, we got the sense that market participants would trade those bills with some caution at levels just below where it closed at the auction. And we've seen that materialize in the early hours of today's trading session.
And definitely there's a bond auction coming up. That's supposed to be next week, Monday. What are you expecting?
Okay, we saw the DMO release the calendar for the remaining quarter, the Q4 calendar for 2023. We didn't see any surprises there. We saw the DMO intend to offer about 360 billion across the next 3 auctions, which should amount to about 1 trillion for the rest of the year. The same 4 bonds are being maintained, the 2029s, the 33s, the 38s, and the 53s. Market participants had expected this and had priced that into their expectations. So we didn't see any real reaction to the release of that calendar to market trading. We've still seen the underrun bonds trade at levels very close to where they closed at the auction. To again give you some color, we've seen the 2053s trade at about 16.3%. At the auction, it closed at 16.25%. For the 2029s, it closed at the auction at 14.5%. We've seen it trade slightly higher at 14.5%. 0.6%.
And definitely, it's inflation season now. Everyone getting ready for September numbers. What are you seeing coming there, and how's it going to impact fixed income yields environment?
For the inflation figures, we expect the Bureau of Statistics, the NBS, to release those figures on Monday. For the August figures, we saw those at 25.8%. It increased by about 24.08%. We expect a similar increase for the figures for September. We expect an increase in the headline inflation, which should be significantly led by increase in food inflation. Food inflation for August came in at about 29.34%. We expect that rate to go higher as well, and we expect that to be reflected in the headline inflation figures for September. With regards to how we expect it to impact market figures, we would only see that impact if the figures released are significantly different from what the market expects. Market participants are, however, looking forward to the MPC meeting. The meeting for September was postponed as a result of the fact that the current CBN governor was being confirmed or screened at the time. So the next scheduled MPC meeting is supposed to be in November 20, but we may see an MPC meeting before then because the last one was postponed and we don't have any communication that it was outrightly cancelled. So market participants are keeping one eye on that meeting to get a firm understanding of the policy direction and decisions that we expect from the current CBN as well as the Ministry of Finance.
And talking about what to expect to the next MPC meeting, do you see maybe another hike coming? What do you see or hold?
Okay, so that expectation will be tied to expectations around inflation. And as I explained, we expect the inflation figures to go higher from the current 25.8%. We expect the MPC to, of course, respond by taking the MPR, the monetary policy rate, slightly higher. The rate is currently at 18.75%. At the last MPC meeting, it was increased by 25 basis points. We may see a similar increase at the next MPC meeting. We may see the MPC take the MPR from 18.75% to 19%. So we may see that happen. But again, it's a new administration with a new CBN governor, new deputy governors, so a new committee, a new monetary policy committee. So we may see a different set of methodology or ideas around that committee. So the first meeting is really key for market players to gauge the mindset of the current CBN governor. But we can, of course, gain some insight from the comments he made during the screening process, and market participants have taken a lot of optimism from that. From our conversations with internationals as well as local counterparties, the general sentiment is that this is a positive CBN, and we expect forward-looking directions from the administration.
All right, definitely. Everyone looking forward to that first meeting, other new leadership for the CBN. Thank you so much, Senator Aldo, Team Lead, Asset and Liquidity, Access Bank. Thank you. All right, let's take a look at other markets now. Talking about the crypto market, we see Bitcoin there, 0.77% down. It's a mixed picture, mixed colors we're seeing right here in the crypto market, showing us the sentiment. Let's look at the sentiment right now. Fear Greed Index, seeing what the sentiment is. So it's fear, 45 points of 100, so showing that investors are getting quite jittery in this market right now. Let's look at the top cryptocurrencies we track. We see Bitcoin, $26,891 this morning, down 0.77%, and Ethereum did lose that 1,600 level, 0.74% up, trying to get back above that. BNB, native coin for the Binance exchange, $206, marginal rise there, and Cardano at 24 cents. Let's bring in Gilbert Jokpata now, financial market analyst. Hello, Gilbert. Good morning.
Yeah, good morning, Mr. Ladi.
Right, so all eyes now on U.S. CPI data. We're supposed to get that sometime later today. What are you expecting? How's it going to drive sentiment in the market?
Okay, in anticipation of today's CPI numbers, we've had other interesting data which could be considered leading indicators to what today's CPI numbers could be and what the Fed could do next in regards to interest rates. One of them was the PPI numbers. PPI numbers actually came out higher than expected, which is about 0.5% higher than expected. And I really consider that quite a high number. And this really affected the market slightly negative, the cryptocurrency market, because we saw Bitcoin lose the 28K zone. But this actually also priced in what today's CPI numbers could be, because with this, we should be expecting that today's CPI number should be about the same or a little bit higher than what it was last time. Market participant and analysts actually predicting about a 3.6%, just slightly lower than what we had the last time. Another number was the FOMC minutes. The data was very important because inflation remains a Inflation remains a concern. The Feds have also reiterated the fact that they will keep increasing interest rates until we can have inflation back at about 2%. And one more rate hike was also priced in, even though it was considered that it will be restricted. So today's CPI numbers, I think once again that the Feds are going to control the next direction of the market with whatsoever today's numbers could be, and whatsoever happens afterwards will also affect what we'll have in the in regards interest rates. I really think if we have inflation higher than what it was last time, the market is going to react negatively. But once again, I think we are about testing some levels which we thought we have passed before. 28K was a level, 24K and 25K is a level, and 20K is another level that the Feds could impact with whatsoever they will take after today's numbers will be out.
All right, let's look at Bitcoin now. That debate rages on about who created Bitcoin. We've heard about Satoshi Nakamoto. He is the one they said created Bitcoin. Some have some, funny conspiracy theories. Some have talked about the CIA. What are you hearing about this? Who created Bitcoin, really?
The idea of who created Bitcoin is highly debatable, but the question is, who is Satoshi Nakamoto? And the answer to that question is, we are all Satoshi Nakamoto. All of us in the Bitcoin blockchain, the miners, those who are participating, using it in forms of transaction, we are all Satoshi Nakamoto. The idea of who Satoshi Nakamoto is doesn't really matter, because we are all market participants, and this is actually the democratization of a currency and the democratization of an asset. So if this is the case, all of us who are participants are actually Satoshi Nakamoto. Yes, most persons could come out there and claim to be Satoshi just to drive clouds or have attention to themselves, but we should be slick by careful of anybody who comes out to say he's Satoshi Nakamoto. We all are Satoshi Nakamoto, and the greatest gift that the creator of this network gave to us was keeping himself anonymous. This way, the identity, the structure of the entire ecosystem is preserved by all the participants in the ecosystem.
Right, quite interesting. I guess that's why it's seen as a very risky market. You don't know who created it. Thank you so much, Gilbert, financial market analyst.
But let me say this.
Right.
Please, let me say this.
Do say it.
The market is not risky. We actually have risky investors and risky traders. No asset actually is risky on its own, but it is what the participant do that actually makes it risky to that investor or a trader.
Fantastic. Thank you so much, Gilbert. Always great having your perspective. Thank you.
Yeah, thanks for having me.
All right, so, look at the top gainers there. Loom, one of the oldies there, topping the counter up 13.52%. So that's the one leading there with a double-digit gain this morning. So that's how the market is looking today. It's still fear right there in the crypto market. And that's the show, and those are the stories moving the market right now. Don't forget to join us at 1:30 on Business Incorporated for more updates and developments in the world of business. You can watch this again on our YouTube channel. Just flip over to YouTube, search for Channels Television, and click on the videos. You can watch all our production. Thank you again for watching. I'm Ladi Williams. Bye for now.